Good day, everyone. I am Glyza May and we are the Group 2. Today, we'll be discussing about the sources of funds. Now, what do you mean by sources of funds? It is the origin of the particular funds or any monetary instrument which are the subject of transactions between a financial and a customer. Sources of funds may be internal or external in order to find the appropriate source of funds for a business and a key factor in a good financial management. Here are the examples of a sources of funds that includes personal savings, shares sales and dividends, property sales, and pensions releases. As we all know that no business can live without funds. Throughout the life of a business, money is really needed continuously. Why we need money in a business? So at first, it will start a business as initial expenditure. Second is to fund the continuous business activities. And lastly, to expand a business management. Now here are the three main sources of funding. First, retained earnings. Second, debt capital. And lastly, the equity capital.
Retained earnings are the amount of a profit a company has left over after paying all its direct costs. Indirect costs, income taxes, and its dividends to shareholders. This represents the portion of the company's equity that can be used, for instance, to invest in new equipment, R&D, and marketing. The three examples of retained earnings include the beginning period retained earnings, net profit, net loss made during the accounting period, and cash and stock dividends paid during the accounting period. Retained earnings is a term used to describe the historical profits of a business that have not been paid out, and dividends. It is represented in the equity section of the balance sheet. It is a measure of all profit that a business has earned.
Debt capital is a capital that a business raises by taking out a loan. It is a loan made to a company, typically as growth capital, and is normally repaid at some future date. Example of debt capital: bank loans, personal loans, overdraft agreements, credit card debt.
Equity capital is a fund paid into a business by investors in exchange for common or preferred stock. This represents the core funding of a business, to which debt funding may be added. So, equity capital means brought into a business by its inventors. They have also three sources of equity capital. First, bank loans. Second, venture capital. And last one, crowdfunding. And also, equity capital markets. First, privatization. So, privatization means transfer of ownership like business from the government to a private sector. Second, initial public offers, which means when a company first sells its shares to the public. Third, listing means instead of making or including a list and have a private place and also have private placements means a sale of a stock shares or a bonds to pre-selected investors and institutions rather than publicity on the open market.
Other funding sources. Funding sources also include private equity, venture capital, donations, grants, and subsidies that do not have a direct requirement for return on investment, except for private equity and venture capital. They are also called crowdfunding or soft funding. Crowdfunding represents a process of raising funds to fulfill a certain project or undertake a venture by obtaining small amounts of money from a large number of individuals. The crowdfunding process usually takes place online. An investment or project after accounting for its cost. The return on investment is the profit you make as a result of your investments. The profit is a financial gain. Private equity, venture capital, donations, grants and subsidies nga walay connect sa ROI kay mao ni sila ang napil sa funding sources. In other words, gitawag sa sila crowdfunding.
Importance of source of funds. Source of funds and source of wealth are crucial to the fight against money laundering and terrorism financing, since both can be good indicators that customers are involved in criminal activity, while source of wealth refers to a person's accumulated volume of wealth. Source of funds refers to the origin of money or assets that are used in a specific transaction or business relationship.